Hey, good morning. What's up, guys? And thanks for tuning in and welcome to another weekly crypto market update. This is Setup Saturday, and as always, I am here with Zero Cool. How are you?
Good morning. Good morning. Pretty good. Pretty good.
Yeah, it's been a crazy week. A lot has happened, but if we look at the chart, so let me get the chart. Bitcoin is looking great. Bitcoin is at the moment at 116,000 US dollars. So I think the market is looking great. What do you think, Zero Cool?
I think we're gonna have a slow weekend as usual, lower volume. But next week, rate cut could give some sparks. I think volatility next week for sure.
Yeah. So let's dive right into. So today, what we're going to talk about is, of course, as always, the macro to understand Bitcoin's price movements. We're going to take a look at the US jobs report that we saw earlier last week. The interest rates, of course, which are super important. Like you said, there's going to be a big decision next week. We're going to look at the inflation, global liquidity, as always. We're going to do some Bitcoin TA. We're also going to do some Ethereum TA. We're going to have a look at the others, so the total three, which are all the altcoins, which are breaking out at the moment. And yeah, so I think it's going to be a very great episode. So let's dive right into it. So as I said, the jobs, and there was a US job growth revised down to 911,000 jobs through March. So if you have a look, 911,000 fewer jobs were created between April 24 and March 25, which is honestly crazy. This is the largest downturn in history ever happened. So they revised it, largest ever, which is crazy. So I saw some articles that the economy is basically already in a recession last year, and it might already have maybe have bottomed out. So maybe that we had recession and we're gonna go that is the business cycle. So that the business cycle is now going up afterwards. This is a very good visual representation from Trueflation of the jobs. So before the revision, it was like this. So still down, so not much job creation, but it's even worse than we expected.
We live in an absolutely crazy world, right? We have the normal people. Like there's less jobs. The income is bad compared to what the prices cost. That's the inflation. But on the other end, Bitcoin is at an all-time high, gold is at an all-time high, stocks are at an all-time high. Like people with money and with assets don't feel this issue. They see their grocery bill go up and their other bill, electricity, internet, it goes up a little, but it doesn't really affect them. Well, on the other spectrum, you have like the normal people who are the normal wage. That's not even the poor people. That's just the normal people. They absolutely feel pain right now, and there's such a disconnect right now. I don't think I've ever seen this in my lifetime, at least.
Yeah, I think one of the main reasons is the central bank, which causes the inflation of the US dollar. There's a lot of monetary inflation, and that creates the division of super rich and super poor. But the reason why we look at the jobs report is because it's a very big decision for the Fed. So they use the jobs report if the jobs are going well, if there's enough job creation, there isn't the need to cut the interest rates.
Mhm.
But if there is a weaker labor market, as you see right here, there is a higher odds of rate cuts, which is why we look at these numbers. Another thing you have to look at for the rate cuts is, of course, the inflation. And these numbers came out last week as well. So, and this was the only thing what was stopping the Fed from cutting their interest rates, basically. But as you can see now, so the inflation data just came in, I think it was on Wednesday, and it came in much cooler than expected. So even it went cooler than, like I said, the expectation. Sorry. So the PPI, I think I got it right here. Yeah. So the PPI came in about 2.6% versus 3.3, which was expected. And then the core PPI is 2.8% versus 3.5, which was expected. So it's much, much lower. And I think this is the thing, which is why the Fed will probably cut their interest rates next week, and which will be super optimistic for the risk assets, the markets. I don't know if I have another chart for yeah. So here it's mostly services that cost a little bit lower. The goods cost a little bit more. But the most important thing is that in total, the PPI went down. And that's just a clear sign that inflation is easing faster than the markets thought. So this is super important, like I said, for the interest rates, which is a super important driver if you're an investor for asset markets. If the rates are lower, risk assets do better and better. So at the moment, you see there is a 100% chance that the Fed will cut their interest rates next week, but there is a 6.6% that we might see a 50 basis point cut. And I
Double
think
cut.
it will be super bullish for risk assets like altcoins, for example. But so if you look at Kalshi, which is prediction markets, and that was a good question we had in our Discord last week, I thought, from Panda. He asked me, yeah, where do you look at more? Do you look at the prediction markets or do you look at the CME? And basically my answer is the one with the more volume is a better representation of the market. So, and I think a lot of the times, like for example, Kalshi and Polymarket, they got higher volume than the CME. So it might be the case that this is a better representation of the markets. And you actually need to look at these numbers to know if a rate cut is coming or not. So this gives it actually a 3% chance that we're not going to see a rate cut at all. But I do think we will see one.
That would be interesting. We don't see a rate cut.
Yeah, I think then all the risk assets will crash enormously.
Oh, there's never a zero chance, right? It can always happen, but
yeah, it can 3% apparently. What I wanted to look at is, maybe I can show it like this. So when we saw the inflation numbers and when we saw the jobs revisement, the odds of a 50% basis point cut was much, much higher. I don't know if I can, it was close to 20% actually, that we would see a 50% basis point cut. And the reason why I think it's not the case anymore is that, just like you said, everything is an all-time high, gold all-time high, stocks, Bitcoin almost. So the Fed cannot just cut 50% basis point cut, because that will just show the markets that there is a lot of fear that it's an emergency cut, that it's not going great at all. So I think that might have an opposite effect.
Regardless of 25 or 50 basis point cut, I do think we'll see some volatility. I do not think it will be like a straight arrow up on every asset and Bitcoin alts, a straight arrow up. I don't think we'll see that reaction. I think we'll see a lot of shops, some liquidity grab below or above maybe. And then when it like finally settles and they ran the stops of everyone, then it will take off.
And what I also think is one of the more important things is it doesn't really matter, in my opinion, if we see 25% basis point cut or 50 basis point cut. The thing is just, we will start a rate cutting cycle, and we will see a rate cut every month or a month and a half. And that's the most important thing. Not that we will see a 50% basis point cut. No, that we will see each month a rate cut, and that will be super good for our risk assets. So I think the time to be allocated and the time to be out of cash is coming very, very close. There is Reached Yedai in chat, so GM Reached Yedai. So let's go on. So
Chermo also said hello earlier at the very start.
Oh, I didn't see that. Okay.
Well, hello, guys.
So again, I told this last week as well. So if you guys want to be live on an episode, we are here every Saturday, 2 p.m. Central European time. So just come and chat. If you have a question, just ask it and we answer it live. Yeah, so what I was going to say is, well, last week we showed the charts, and it's good that Chris is in chat because he's always showing the chart. Yeah, when they are cutting rates, the market is dropping. And I talked about this last week and I gave my reason why that's not the case. Today, what I want to show is when we see a rate cut, historically, we see the gold price going up. And we saw this the last few weeks as well. Gold is just going up because we know the rate cut is coming. There's a lot of monetary inflation as well. And as we all know, gold versus Bitcoin, there is a 200-day lag. So first, gold moves up. I showed this chart last week as well. And then afterwards, Bitcoin is going up as well. And I think this will just be the case. So rate cuts, gold going up, which we see at the moment. And then Bitcoin will follow with a 3-month lag.
Yep. And even last week, gold was already taking off. I think it was just breaking out. And it just went up through the week. Little to no downside, no dips, up only.
Yeah, that shows just that the market thinks there are already cracks in the economy and that they need to protect themselves with hard assets.
I did think I posted something in our Discord where this gold rush came from. Not sure it was our Discord, but basically it's China buying a metric shit ton of gold for months and months. I think it's like their 11th consecutive month that they've been buying a lot of bullion gold.
Damn.
The big driver of it.
Yeah, definitely. Okay, so moving on, what I always talk about, everyone knows it, is global liquidity, since that's the most important thing if you're a Bitcoin investor to look at, in my opinion. And this week, global liquidity has reached a new record high of 184.6 trillion US dollars. The move is mostly down due to a downtrend in the bond market volatility. So we can look at the bond market volatility with the MOVE index, and the MOVE index is currently at the lowest level since January 2022. So this is very, very good for global liquidity. If there is no volatility in the bond markets, that's always good for the global liquidity. And then the second thing was a slower pace of Bank of Japan and ECB in terms of their QT. And that's just about it. It's not going exponentially up, but it's still moving up week after week, which is what needed to push Bitcoin higher week after week, basically. And yeah, that's about it for me, Zirkle. So if you want, we can go over to your screen to do some Bitcoin TA immediately.
Yeah, we'll start with Bitcoin. Yeah, it's up. Okay, perfect. I threw on the D7R indicators that I have. Let's see. Overall, it's still in an uptrend, right? Since what was it? April that we had that little fake out crash where I think the stock market also took a dive and we recovered. Stock market has been up only. Bitcoin kind of peaked in August, but it's a bit again above the cloud here. Not Ichimoku cloud. I think it's K-Lead and something else cloud. Structurally, it looks great. Like I said earlier, I think we're gonna like derp around, chop around a little bit because it's weekend and people don't like to take a position into like a rate cut decision. But like you said and showed, the market is super bullish about the rate cuts and almost priced in at 100% that there's going to be a rate cut. So that's probably the upwards pressure. And Sailor has been buying since Monday, I believe. It points up. Nothing more to say. And then the question will be, where do we go? I think at the start of last year or this year, we had like 128K-ish is probably where we'll end up for this cycle. I think we're going past 128K, no?
Yeah, I think we're going to go way past 128K. I think what I think is about 150K, but there is a lot of room to move up in altcoins, I think.
A lot of wiggle room. Yeah, I agree. It really depends on like what monetary policies and regulations do, right? If they have easier policies or they're easing the policies and they have like pro Bitcoin regulation, then maybe it doesn't stop at 150K, it goes higher. Because
if you don't really have a setup on Bitcoin, I can just show my screen immediately and go over the altcoins. So according to this metric, so the alt season index, which I know a lot of people look at, it's at actually alt season. So currently we're in an alt season according to this index, and the reason being is not that we're in a blow off top alt season, but that just Bitcoin went down a little bit these last few weeks, and altcoins just went stable. I know today and yesterday altcoins went up, and Bitcoin went up as well, but altcoins went up more. But this is not a chart on day to day. This is more like the last few weeks, and then just altcoins went stable and Bitcoin went down a little bit. If we look at, and I'm going to show this maybe with this screen. You can see that the others are breaking out. So currently, this is the total tree, which is the total crypto market cap excluding Bitcoin and Ethereum, which is a very good chart to know if alt season is coming or not, because it's basically only altcoins. And this is the ascending triangle is currently breaking out. And I think if this breaks out, which it's doing at the moment, we might be on the verge of an alt season starting, in my opinion. I don't know if you saw this chart already.
Yep. It does look like it's breaking out, and I think the top was start of 2025, right, last time, and then 2022.
This one, this is just the last stop of. What do you mean?
Yeah, no, that indeed the two levels where your top line is, where we.
This is the top of previous cycle, 8 November, and this is the 2 December, which was basically, I think, when the Fed did the 50% basis point cut, the emergency cut, in my opinion, to try to have Kamala as president, when altcoins soared enormously. And so now again, when we're on the brink of having rate cuts again next week, it's now breaking out. So we can also look at Bitcoin dominance, which is basically almost the same as this, but this is Bitcoin versus all the other coins, and it's breaking down. So it's exactly going how I planned this a couple months ago in my altcoin video. It's exactly doing what I thought it was going to go. So it broke down this channel. Now it's going to go to into the issue.
Not sharing the screen, I think.
I'm not sharing the screen.
On the other screen. There you go. Yes.
Thanks for telling. Yeah.
So
this channel basically was super important that we broke down, because this was an enormous upward channel for months and months and months. We broke this, and I think we're just going to go now do the edge to edge on the Ishimoku cloud. We will see a bearish TK cross. And I think if nothing bad happens in the world, because you never know at the moment, I think there is a very good setup for altcoins. Of course, this is not financial advice. Always be cautious when altcoins, but especially time is better than other years. What?
Especially costs with altcoins. Because they do move way harder than a Bitcoin would or a gold would, up and down.
You had a chart as well you wanted to show about this?
I'll share this tab. Yeah. There we go. This is the total open interest based on blue is Bitcoin, green is Ethereum. You can barely see it here, and then orange is others. What I wanted to show is that if we go over here, the percentage of OpenAI on others is above Bitcoin. It's at 37%, and Bitcoin's at 36%. So there's more open interest in all the altcoins than there is in Bitcoin at the moment. Why is this? This is on my watch out, this might be a local top list. If we go back in history, we go to...
Yeah, the funny thing is, I'm going to show my screen real quick. So what I talked about, the top of the previous rate cut, coincides exactly with your top on your chart, where the OI also passed the Bitcoin OI.
Yeah, and then if we go back to January, I believe it was, March 2024, where we had where others peaked above Bitcoin. That's also a local top on your chart, by the way. It's not on top of the line, it's in the middle. So yeah, seeing this, I'm less inclined to ape in alts, because I do think there might be a little flush first to reset this metric. A good thing is, last time, like in March 2024 and was it in November or December 2024, both times others were like 40% plus. We're only at 37%, so there's still leg room to fly, right?
Yeah, and I don't think this is a metric you have to look at on the day itself. I think this is a good metric, but with a lag, in my opinion. Like, for example, to me, it's the same as the Coinbase app indicator in the App Store. This is a famous top signal when the Coinbase app is #1 in the App Store, that a lot of people say, yeah, top signal, top signal. But I do think at first it's very good, because it shows a lot of people want to buy crypto, are getting into crypto. So it's not the top signal immediately, but only like 2 or 3 or 4 weeks afterwards.
Yeah, wouldn't go as far as 4 weeks. I'd say like 2 weeks, around like 14 days, like I don't know, 12, 14, 16 days ish. That this is like an indicator to look where the market is at. Maybe it's because, and that's the scenario we kind of have now, that alts are kind of flat and rising, but Bitcoin is trending down. That itself wouldn't be like, oh, alts have topped. If alts have like 50% rally, yeah, then you could see it as an indicator to slow down. And again, not like, oh, I need to exit the market completely. More like, oh, I don't need to slide my leverage bar over 3 to be safe.
Yeah, no, it's very good to be cautious always, because when you look at Twitter, everyone is saying, yeah, it's gonna be also using leverage 100 times. So it's also good to look at all the indicators and to be cautious, because that's when you lose money. That's when. So I've been in crypto. I think, how long has it been now? Since 2016, so 9 years already. That's where I see people losing money when alt season is coming. So which is good, which you need to be positioned for it, but don't be positioned. Don't be overly positioned. Don't take on leverage. Don't be too greedy. Look at also the top signals to know when to take profit and everything. So I think it's good that you showed this chart here. Cool.
Yep. Another one that I like to use, and is not nice, is a bad way to put it, but listen to your colleagues at work, right? If you're at the dinner table at work and your HR lady is talking to somebody from administration or service desk or whatever, and they're like, "Oh, I made 50 or $100 on the Pengu coin going up." That's literally when I say, "Oh, excuse me, I walk to my desk, I log in, and I sell crypto." Okay, I did it last time we peaked, and I'll do it again.
It's true. Unfortunately, but it's true.
People and friends are indicators. It sounds maybe cruel and not nice, but you just need to use what's there, right? The Coinbase app being so high is another indicator of the people that are talking at the table and that they're making profit.
But in my opinion, this this is at the moment our PTSD talking of the previous cycle. So don't be too bearish yet. Don't look only at top signals. I think we're gonna have a good time ahead. So let's maybe move on. And I want to talk a little bit about Ethereum, because this week there was a news that the SEC delayed the BlackRock staking ETF of Ethereum, and so now they delayed it to October the 30th, which I think everything is going to align. So there's a lot of other ETFs lining up as well. Their final deadline is also in October. So I think in October, we will see a massive approval of a lot of altcoin ETFs. We will see the Ethereum staking ETF, which is super important, in my opinion, for an alt season to get going. And so, in my opinion, everything is aligning. So don't be too bearish. I also made a video. I told Zero Cool before before the stream. So last night, I think at 2 a.m., I filmed the video of what coins to buy, because Zero Cool asked me during the day, what coin should I buy, knowing an alt season is coming up, because we all feel it a little bit. It's coming up a little bit. So what I think a good narrative this cycle is the coins in the USA, because of course Trump is president. The US is the big financial powerhouse of the world. So of course you need to look at it. So what I did was I looked at all the coins that are made in the US, because Trump is going to give them preferential treatment. You have to look at the ties of the Trump family. So for example, World Liberty Financial and the US digital asset stockpile. So this is a chart that I showed in my video. I'm going to post it or either tomorrow or maybe on Monday. I just need to finish the thumbnail actually, and then I'm gonna put it live. So this is what I came up with. I'm not gonna go too in depth. So if you guys wanna look more into the US narrative and what coins you buy, watch the video. I'm probably gonna put it in the description or in the comments as well. And yeah, I think this was a very good episode. Maybe let's just do the predictions.
Yep. Sounds good. Or do you want to go over Ethereum real quick?
Oh yeah, sorry. You wanna? Yeah, sorry.
Yeah. There we go. We got my my level to level chart from last week. As you can see, we didn't go down. So let's draw a new level. Whoop. Yeah, above here, it's go time. One caveat: let's say we do break above here. This needs to have volume. This now is a Ethereum chart based on like the entire market with multiple exchanges, so I cannot load volume on this. But the break above this level here, as you see, it topped here, it peaked over here, it was resistance here, where we're idling near it here. This break needs to be with volume. If this like slowly breaks with low volume, I wouldn't like long the breakout. If it does print like a candle with volume, then that's where I'm gonna hop in for Ethereum. I'm not positioned in Ethereum now. Well, I have spot allocation, always have spot allocation, but I'm not in a leverage trade for Ethereum. But yeah, that's what I'm waiting for to see how it reacts here. It might just like reject again, and normally then I draw if I can quickly find it. Here, a nice big hammer. and then it rejects here and it goes down. Also a possibility. Less unlikely with the rate cuts. What we'll probably see is like some derping around, even maybe pop above with low volume, then a rate cut where it flushes out people, and because I don't know, markets are stupid, or crypto always likes to run stops and liquidity, right? It's never
markets are manipulated.
In crypto, more manipulated than anything else. Sentiment, it's going higher, but how it's going higher is mostly manipulated, right? So yeah, I want to see a clean breakout with volume before I hop on Ethereum. But it looks good. And if it rejects,
nice drawing,
right? And if it show this to somebody who has no knowledge of crypto, you'd be like, you need some help, friend. But on the downside, because I do think it is perfectly possible if we get like a 50% basis cuts and the markets get spooked. These are the levels below. Do I think we're ever going to see like 3K or
then you
below?
Have to buy.
On the dip of the 50% rate cut, absolutely. But markets can get spooked, right? Make it a wombo combo. War breaks out. Russia attacks Poland again. NATO enables Act 5. I'm just spitballing doom scenarios that are very unlikely to happen, but it is still a scenario that can happen. It's not a possibility. And then what I was trying to say, then there's the levels below that you need to look at. Do I think we're ever going to see 3K or like 2.4K again, especially this year? Absolutely not. Almost no way, right? But you need to prepare for everything. Crypto is if then, if then, if then. If you don't come with a game plan, you're going to probably be right here if you say, oh, we're going up. But once you get a drawdown or it's against you what you think, that's where people lose all their money. And there have been enough cycles and enough examples for this to happen. And that's about it for Ethereum. Up, and if we break with volume, then I'll join in.
Yeah. All right. It's great. So I think we're going to do this more now, week after week. Before it was a bit more of a macro and only Bitcoin stream. So now that alt season is getting started, I think we're going to talk a little bit more about altcoins. Mm-hmm. And that's just how we do it on this show. We always talk our book, how we are positioning ourselves currently. But let's go over to the predictions. So
horrible.
Let me show this. Yeah. Yes, you're cool. And I told you in Discord this week, I think you're too bearish. I think your PTSD is too high.
You might.
Do you want to start or do I start this?
Saturday after the rate cut. Yeah, let's flip Giga bullish and throw it at 122.
You go to 122.
Mm-hmm. Up,
better.
Up, 22. Yeah, there we go.
Now it's difficult because I was gonna say 122 as well.
Oh, then we put it there.
No, it's fine. It's fine.
If we're in alignment, it's a good thing, right? And we both agree we're going the same way.
I'm gonna be here.
Watch this be like the perfect counter indicator. So just counter what I do, and then you make money. But
there is a question in chat of G Armo. Maybe let's go over it real quick. So he asked, do you think we'll get a deep correction or a flush before alt season kicks off? And the thing is that that's super difficult to know. Of course, we will see some flushes like Zero Cool said, and he showed this OI charts. Of course, there will be more and more OI the more deeper we go into alt season. And then, of course, inevitably, you will get a flush. I don't think, honestly, now we will see the flush happening soon because I don't think it's the, how can I say it, the main narrative that an alt season is coming. I think a lot of people are still bearish. I think there's a lot of doom scenarios on Twitter that the world is going to go in a mega deep recession. So a lot of people are afraid to position into altcoins. Mm-hmm. So I don't think we will see a mega flush. That's kind of my answer. I don't know if you have another answer.
The question is before alt season kicks off, right? I'm leaning to like a 50-50. It wouldn't surprise me. But if I'm like sideline 0% allocated, I would be allocating today.
That's the thing, of course.
40% always have a bullet left in the chamber, but you can be sidelined for this. I think, because the rate cuts are coming, and like Jack showed with the CME probability, it's not just one rate cut, right? It's rate cuts after rate cut after rate cut. And that just means that money that is parked idling and earning interest will flow out of that because the interest is going down, and that money ends up in crypto. Not all of it, obviously, but crypto is in the line where it drips out of or drips down to.
Yeah, that's a very smart thing Zero Cool said, and I want to emphasize on this. Every situation is different. Your situation is different than mine, is different than Warren Buffett. My situation is different than Zero Cool. It also, so your lifestyle, it also depends on how are you currently allocated, what is your net worth. So if you have, like Zero Cool said, 0 in altcoins, yeah, you should be starting to allocate, in my opinion. But if you're Warren Buffett, of course, you shouldn't allocate, because who the fuck cares if he buys an altcoin or not? If you have no money at all, I think you should only invest in altcoins. So it's a super difficult question because every situation is different. We show on this stream what we think, how we position, but it might be different for you. But like Zero Cool said, if you have no allocation, and I think a general advice would be, not financial advice, of course, to start allocating a little bit, because everyone feels it a little bit. It's coming up, and if you look at the charts, at the interest rates, of course, it's coming. Another one from Case in chat as well. He said, hello, European friends. And he's thinking that crypto markets will surprise and will last longer. And I'm in the same camp as well. I think I spoke about this last week. So normally, if you follow the 4-year Bitcoin halving cycle, it should top, I think, next month. I think the beginning of October or something. And so I think this cycle will be the first time to see who is right. The more macro guys like me who follow global liquidity, or the more crypto native guys. Well, I'm crypto native as well, but the more crypto guys who think the halving cycle is still into effect. I think personally we will go into January, because that's the global liquidity top, but you never know. It might be when we get there that I will be allocated much, much longer. Why? Because I think, and I think I mentioned this before, I think Trump will pump the markets before the midterms to show that everything is going great. So they will pump a lot of liquidity into the markets. And I think the midterms are next year or something, because in November it will be 1 year.
October, September next year, I believe. I'm not sure.
So maybe we will go up until then. Who knows? But currently, I'm allocated until January. But it might change because, like I said, that I will be allocated a bit longer. And of course, we will keep you guys up to date on this stream. But let's call it for today. So everyone, thank you for joining. So I'm going to say it again. If you guys want to be here live with us, we're here every Saturday, 2 p.m. Central European time. Or, of course, join our Discord with the link into the description. Zero Cool, thank you very much for coming on. It was a very good episode. Very packed with a lot of info. Short episode. So very, very nice. That's how I like them.
Yeah, I agree.
So, guys, see you next week. And thanks for joining. Bye.
Bye.